All right. Everything says we're live. I see the disclaimer. I think we're good to go. So we've had kind of an interesting week so far. You got a couple of ETFs launched, and well, things are actually looking pretty interesting for market conditions as well. How's
Yeah,
things?
no. Oh, sorry. Go ahead.
I would say how's things going with the volume coming in so far? I'm looking at them pretty active so far.
Yeah, I mean, so far so good. It's just a matter of getting the word out that there are now 2x ETFs out there for Tesla and Nvidia. I kind of look at it like if there's 7-minute abs out there, well, 6-minute abs are better.
Right.
So you've got 1.5s and 1.75s. Two is better. So we're getting a lot of interest. People saying they're going to move from the less levered to the more levered. So so far so good, and hopefully within another week or two we can get some options on them. So for those degenerates out there who want to trade options on a 2x, we are working on it.
I kind of say that too. I liken, especially when it comes to leverage ETFs with options volume. I tend to be an options seller, and I say exactly that. It's like being a casino. You're selling speculative, gambling tickets to people who are essentially speculating the market on a leveraged ETF. As people should know, leveraged ETFs they do tend to be what they call a depreciating asset over time. So when you're trying to take a position in options, time decay is rapid enough on equities and especially indexes. Then you go to a leveraged ETF and it's like, oh my gosh. So, but they're still tradable. I mean, I love to day trade options on anything. I don't care what the time decay is when I'm day trading. So that's
Sure.
purely where you should be if you're trying to trade options on something like that. And if you're an option seller, that liquidity from the day traders is what you depend on to have liquidity to get in and out of your positions. Very good stuff. I love a leveraged ETF. I often mention I tend to have a couple of private fund managers that come in and learn some stuff from the bullish bears here, and the primary interest is learning how to sell options and generate income from them, and learning the process is one thing, but then picking the right equity to run it on, especially when it comes to stuff like the wheel trade, uh, you know, it can be kind of hard. But I've noticed that a lot of over time, a lot of them tend to gravitate towards those leveraged ETFs as a good option selling vehicle. So I think this is providing that service to a couple of very key equities, and I really like that. So I'm gonna be watching. Moving on, we've got quite a bit of fun stuff. I was going to kind of go over the S&P real quick if I can, and then we'll get into some gym stuff here. Um, this morning we had a nice little diamond pattern play out. It was kind of hard to trade. I made some bad examples of scalping some of this morning, but I've had kind of a lot going on this week personally, so like my head wasn't fully in it today. It was a day that I should have not traded, and for demonstration purposes, I did a couple of really bad trades, and you know what? I'll take it because my worst day, if this is all I can do, my good days more than make up for it, believe me. But coming into being able to provide that example of what it looks like and being able to see it as a member was really beneficial for our members this morning. This price action is difficult, but when you get to the gist of it after the opening range, it becomes easier. And right now we're setting up for a beautiful bearish 1-for-1 down move on SPY. Very easy picking. Long term, we're kind of looking at one key metric here. Let me go to a full size grid here so I can zoom in on SPY here and give you some real dope. Go to the weekly. Giant cup and handle, unmistakable. We're at the end of this handle. If we can't hold this area and start to resume into a bull trend from here, we might be in trouble. We might be visiting some lows. And market conditions can certainly be kind of neutral for a few days here before we make a decision on what direction we're going to go from this. I know there's a lot of doom and gloom, sky is falling naysayers out there saying this recession is real. Da da da. I don't know, man. I just trade what's in front of me, but we're just outside of this descending channel. We know that we could sometimes get a quick liquidity grab and a fast reversal. So as much as we can hope and dream about a bullish trend emerging from this, we have to be cautious here. So this is an area where we're looking very sideways at the market here, and we're kind of wondering, well, what's next? This is where you pay attention. Whatever happens between now and about the end of the year is going to tell us a lot about what to expect for next year's market. And I call this the danger zone. If we break this zone, we're likely to rip down here, and we could even go and see these lows. Ouch. But, we'll just keep watching. We'll see what happens. We'll trade what's in front of us, but just be kind of cautious if you're looking long-term investments. This is kind of a time in the market where I'm a little skeptical about even taking some swing trades. But let's dig into Jim Cramer's list and see what he's saying. He pounded the table a couple times on a couple things, and I was going over some of this stuff with our group before we got on, and
just so you know, because you don't have the pleasure of watching Mad Money every night, while he was sparse last night, he also, for him, sounded bearish. So, I mean, that should give the Bulls at least a little bit of hope.
I was looking at that, and there's a couple he talked about in the top 10 things list here that he seemed pretty bearish on it. I think he might have bottom ticked. We'll dig into him when we get to him. Microsoft was one where I was kind of particularly wondering. He was saying, what do you say here? Quarterly earnings release was simply amazing, blah, blah, blah. He was a bit bullish on it, and, that was yesterday. Ouch. That measured move was plain to see. So today we're playing.
That was an obvious short.
Yeah.
Right there.
We're playing between the liquidity zones we mapped out freaking months ago. It's just like clockwork, an easy trade. Now we're in the middle. We're kind of retraced back to a key level here. We could bounce here, sure, but man, the moment he started saying anything remotely bullish about it, which was yesterday morning, I beg to differ, y'all. That was quite the nice short this morning. We've already made a nice 1-for-1 down for the day. Probably going to reach to the bottom of our liquidity zone here around, 327, 328-ish. We're in trouble with this a little bit, but I think we could see a little bounce down in here. But if we resume this thing, we got a long way to go down through the levels here. These are key pivot areas. If we break this zone, we'll likely hit the next one, the next one. Just trade from one pivot to the next. But be watching for a little caution if you're short here. You may decide to take profit if you start to see signs of a little reversal here. And looking left, there was some consolidation in this range for a while. So great overnight short.
And I'd say watch the 50-day. We're shorted in SJIM personally. I covered this morning when it looked like the market was going to get a little bit of a bounce. Unfortunately, covered way too early, but take your profits or else someone's going to take them from you.
You know what? I've been meaning to do this for a while. I'm going to do it live. I'm going to add a damn 50-day.
Gotta have the 50-day, man.
I should. I already have so much noise on my chart. It kind of drives me nuts sometimes. But what's one more moving average, I use a simple moving average. I know some people swear by the exponential. I like to use a simple. And yeah, we are under the 50.
I use the simple also.
Curling under. We've cracked the 15-minute 200s right there. We've got through the 30-minute 200. We're approaching the 2-hour 200, which is more important to me. If we shoot through this zone, we'll likely see it hit that sucker pretty cleanly. I might even go so far as to add some smaller liquidity zones off these little wicks here in that area, so it kind of plays into shape. As for the daily 50, we're just about at it too, and look, it kind of lines up with where I would target a short just beyond this zone here, and if it continues to go, cool, you can stay short for a while, ride that trend till it dies. But yeah, it's kind of funny. I mean, we're throwing a little shade at Jim here. That's kind of what we're here to do, but that was an obvious one. He top ticked the crap out of that. Sorry. Not sorry. He got into a couple others in this first paragraph on his call outs here. He talked a little bit about Google, kind of the same things. He's a bit bullish on Google, and he did tend to kind of wonder a bit about AMD maybe making an AI bounce into the winter here. I'll get into that too, but let's look at Google first. Google was pretty plainly. That split kind of throws off my data for Webull here. Apologize. We'll go back to this. So I've had this as a 2-for-1 measured move. You can see it's been on my chart forever. Analyst target was up in here. It did exceed the analyst target of 140 for a little while there. It just went straight south. Back into retrace the levels between the measured move is pretty common. We're looking for like 119 to 120 for a continuation of this short. Be aware that the 2 hour has given us a 1-for-1 already to a key pivot area, so we may find support and bounce here. So if you're already short, kind of same rule of caution. If you start to see a reversal here, maybe take some profit or take some risk off and see where it goes. But ultimately, if it breaches this level, it's an easy target to 119.80 to 120, somewhere in that area. Looks about right. There's also an angular down here that extends outside of that zone. It's very possible to reach it. I could probably stick it on a 4-hour chart. There we
I'd
go.
be watching 118.22.
Agreed.
That area, the 118.30, 20 to 30 area, to see if it finds some support there.
Great minds, man. And that's a previous low as well, right in that range. So that kind of makes a lot of sense.
Exactly. If it undercut that, I'm not sure. I mean, I'm shorted in SJIM. I'm not shorted personally. But if it undercut that low and then moved back up, I'd probably look to cover.
Absolutely. I like it, man. That's how we work. We kind of thrive together in that way. And yeah, I mean, price action wise, Jim was a little bullish on this one too. Same deal. We know better. Ouch. I think this stuff comes out. This one comes out at 9:15 in the morning, I think, typically. And you look at the opening range on that, it's like that was pretty obvious. Okay. Moving on, he talked a little bit of crap about AMD, and then later on he kind of he talked a little bit of bullish about AMD, and then later on he talked crap about AMD. It was kind of funny because he was saying like Nvidia's chips not going as much towards China can bounce back into the U.S. market and put a little pressure on AMD and Intel Corp likely. Okay, I can grasp that, but we'll get into those charts later, and I'll show you what I'm looking at. And he may have bottom ticked those ones, so kind of the same thing in reverse. Looking at AMD, though, I mean, I've been all over trading this thing. It's been a glorious powerhouse of price action for pretty much any swing trader. But right here is a key support area. If you're short here, again, kind of look to maybe take a little profit off if you start seeing signs of a reversal. It can continue down to like, $90 or so, maybe even 89-ish. Okay, I can buy that. But in the meantime, if I'm short already, we've made a nice clean 1-for-1 down already to a key pivot area. It's a cautionary thing. I might be even looking for a long position later on if it starts to touch that 90 zone. I'm kind of interested there. If it breaks it, of course, I won't have to be long. I'll trade what's in front of me. But kind of messing with that at all in your portfolios?
So, I mean, SJIM, we're not in it. NVIDIA is the semi that. But with AMD, I do mess with it personally. I like that 100 level. Below it ends up being a great short. Above it, sometimes ends up being a long. A lot of resistance at 110 at the moment in that whole area. But and then slicing through the 200-day, yesterday textbook, short sale coming into today. Again, I'm not in it. I'm short a bunch of other stuff, but textbook.
You can only be in so many positions at a time, man. Sometimes, I'll be swing trading like upwards 10, 15, 20 positions while I'm scalping day trading every day.
Yeah, I have too many charts I watch. I watch I'm watching like 40 charts a day, and that's probably 30 charts too many.
I think so. I agree. Yeah, I'm like kind of like if I'm in 10 to 20 positions, I'm like I consider myself over trading. But if I'm watching just 10 to 20, I feel like I'm spreading my gaze too far. I like to focus in on the stuff that makes the most sense to me, and that's why I tend to focus on stuff that's more interesting to trade. And AMD has been great with price action. I mean, it's been pretty easy to pick off these moves. we got to set up for a little bit more of a short position to go down here to that $90 target. The one for one's pretty well set up, but I'm going to be looking for kind of a decision time between now and the end of the year, really. But probably by the end of November, we might have some answers coming out for which way this economy is going to go versus will that cup and handle follow through on the major indexes. It's going to be kind of
Yeah,
a decision time.
I don't think we will. And, maybe you'll have a little more clarity on the economy. But to me, the big thing is going to be, is the Fed going to cut rates next year, which they've said they are.
Right.
But really, the magnitude, that's going to be the big thing. And we're not going to know that until next year.
Agreed. Yeah, it's going to be a wild ride till we get there for sure. But yeah, it'll be it's going to take some time to work out this volatility first for sure. He goes on to talk a little bit about NFL and this and that, but it really didn't. It just didn't make sense to getting even close to looking at those. He did mention Texas Instruments here, TXN, later on, and that was kind of a not an interesting stock for me to trade, but I was able to pick off some levels that might give us some good setups for some interest later on. I went ahead and looked left, and I went way left. I went and dug up some key areas of support and resistance, and just drew these liquidity zones in here, very similar to an inverted version of what I did for Microsoft, kind of the same deal. Pretty damn bearish in the long term here. It has been a nice clean one for one down. It found support just under this liquidity zone. Can it go lower? Sure, there's plenty of room to go lower, but we're kind of at a clutch area where if you look at this big old bull trend back here, we're kind of right in the middle of that. And I love those 50% retracement areas for areas of interest. And dude, we wicked right to it today. So now we're showing a little bit of buying coming into the trade here. So we found liquidity here for some buyers. This might set up for an interesting trade pretty soon here. He was a bit, what was he, bullish on it? He said that earnings were outstanding or something. I've never been one who even really is interested in holding too many positions through earnings unless I'm selling options. That's a different story. But
Or unless you're doing the opposite of what he's telling you to do through earnings.
yes, that too, for sure.
Yeah. I mean, he's almost as bad on earnings calls as he is on Bitcoin calls.
Agreed. Oh man, it's horrendous. And I tend to not focus so much on making earnings calls, but I can be pretty keen on finding key levels that it could go to. So like I'll watch earnings sometimes. I'll day trade earnings after hours. And heck, back when Amazon was trading in the $3,000 range, I would grab a few shares of that in or out and just scalp the crap out of it for about a good 5 minutes and before that earnings call and be done. I'd make a killing on those. But knowing where the areas of interest are, it's pretty simple. If it starts to rip bearish all of a sudden during an earnings call, you know exactly where the levels are where you'd be looking to take profit. It's pretty easy. But when you're trying to make a call out for swing traders or investors and you're live to millions of people on CNBC about it, to me that's just an area I wouldn't touch. I would say, yeah, scalp the tar out of the earnings call itself, of course, but long term, I wait for those to settle, and then I can decide whether I want to be into a trend trade because that's going to be where your highest probability of taking a win from it is going to be anyway, right? So we're always a little leery about sitting through earnings calls.
Yeah, I never hold through earnings, but I love trading after earnings because, we're always looking for catalysts. And I mean, those stocks will move. And again, like you said on the levels, focus on the levels, and that'll tell you where to go, long or short.
Exactly. And that's all there is to it. I mean, once you got the gist of price action trading, it makes sense to you to scalp earnings. A lot of people I'm teaching over at Bullish Bears, when they start to get price action, it starts to click for them. They find that it's harder to trade low volatility than it is to trade high volatility when it comes to trading in short terms like 5 second, 1 minute, 5 minute charts, especially on high volatility. But the setups are just so much easier to spot, and the levels that they're going to go to are so easy to find. 9 out of 10 students would find it easier to scalp high volatility compared to low volatility. So that's what makes trading those after hours earnings calls so easy is you know where the levels are and you can just scalp from one to the other. If it breaks bearish, take a quick bear move. If it breaks bullish, take a quick bull move. It's just so simple after you get it, after it clicks. Even if you're just still, in the intermediate level of being a day trader, it makes sense to find those levels and know them well. So he was kind of saying that, later on he said, those chips that are going to be kicked back from China because we can't sell them over there because their economy is going to hell in a handbasket or whatever anybody says about it, coming back into the U.S. market, I don't know. I don't know that that's going to hurt AMD or Intel Corp or anything like that. I think they're kind of going to be the intermediates of, well, they're still in business. They still do something right. They still make profit. Sure, it'll put some pressure on them, but price action wise, I think it'll be. I'll be looking for possible reversals on both AMD and Intel Corp in the near future. Just my perspective. He went on to say there was some fun stuff about Snapchat, and the short squeeze alarm started going off on me. You messing with that one?
No, I was looking at that one yesterday, and I was gonna play it, and I missed the move. Yeah, looks like it's nothing much today.
Pretty slow, and this is why I love looking at weekly and sometimes monthly chart. Let me throw the monthly chart up. This is actually kind of.
Yeah, I was actually looking at it yesterday for a possible IV flush, and then it just really started to move pre-market. And then, of course, it gave it all up, but I had gone on to looking at other things.
At these price levels, your return on risk for like running your options positions, option selling, wheel trade strategy particularly comes up. These tend to be in this $10 and less range when they've got lots of attention on them. Some of the best options income strategy stocks to trade. And it's ridiculous. I mean, like literally, an $1,800 risk on a stock. One contract worth of long shares and one cash covered put worth of, cash covering the ability to double that position and a covered call on that. Work out the percentage on that, and if it tends to be like greater than 10% every 2 weeks expiration, the monthly is going to be probably more like 25% return on risk. If you're keen on knowing when to get in and out of those short options positions, it can really make some steady income, especially when it's crawling sideways in a range forever. But this one says to me either it's going to crack the $8 level once and for all and start hitting its all-time low again here and cut it in half down to like 480, even $4. Very possible, sure. Can the company go under? Who the heck knows? I mean, they're worth a lot, but they still hemorrhage money. But in what I'm seeing is this consolidation is going to break at some point. And if there's still a bunch of shorts in this, be careful, because if suddenly you have a short squeeze on this thing, the levels above are pretty damn easy to nail. This one in particular scares the crap out of me in a short squeeze. If I'm short on this, 1570 being short around $8 or $9 is going to crush you. So
Yeah.
be very careful if you're short in this thing. Yes, it makes some tremendous gaps, but it tends to figure out how to cover those gaps and fill them again pretty regularly. So, be very cautious if you're going to be any kind of bearish on this thing, because when they've been accumulated for this long, they tend to do some pretty wild things. In fact, I know there was some people back when I was trading AMD at like $9 a share, who would take and short it, and then some of them got run over when it broke above that $12 mark and just kept on going. I mean, that was the mother of all short squeezes for a moment there, but then it just kept on trending, and people were trying to, top ticket and sell it short and catch the rebounds on that and stay short, and they just kept getting run over again and again. Meanwhile, I was wheel trading it, so I was like selling options on it, long the position, and short cash covered puts and running covered calls. Eventually, I got assigned on that thing up around like $26, I think it was. Selling covered calls, and I was like, well, I'm never going to catch this thing, and I'm not so sure it's going to breach to left me in the dust. But I was able to focus that capital on something else. That's fine. But sometimes you just miss the rest of the run. It's okay. But when you see something like this, it's Snapchat. I mean, yes, it's a money hemorrhaging machine, but
Yes, it is.
at some point, this is going to catch some people off guards, whether it's taken over by somebody or if it drops off the face of it, who the heck knows. But at some point, all the bears are going to be very, very excited to get the heck out of the way. Let's just say that.
Yeah, I mean, it looks like a short to me, but from a risk reward standpoint, there are a bunch of other places I'd rather be.
Absolutely. And this is one of those controversial companies. I would rather not be caught with my pants down if I was bearish on this thing and any kind of huge
Right.
risk. I'll be an option seller on it. That's fine because, my loss is capped. My risk is capped. But as far as being a bear on this thing, I would just be very cautious at this level. Just saying. It just screams,
Yep.
I would love to short squeeze and crush you all over it. And if the apes fell into this, calling out to the Wall Street Bets folks here, oh my gosh, they would just ruin a whole bunch of bears. It's an easy target, guys. Don't give the enemy
Yep.
any cover there. uh, Moving on, you're looking at like Meta and stuff like that. It's kind of the opposite, You look at Meta, for instance. I mean, that has been one hellacious bull move. I mean, everybody and their mother has been pouring money into this thing. It broke that 50% retracement of the downward channels that I love to go long on and catch the rebounds on. I got out of this trade in the wrong spot. I could have stayed long in this thing. Whatever. I made my move and moved on. But look at that gap fill, man. I mean, it just kept on cruising. I'll keep charting it, and eventually it hits the lid. Well, guess what? It kind of hit the lid and made a nice little
Yep.
M top here, and it was a great short. I think you actually did take a short position on this one in SJIM, if I recall.
Oh yeah,
And
no, we've been short on this one in SJIM probably since the beginning. I mean, yeah, he's got a man crush on Jensen Wong, but Zuckerberg is definitely number 2 on that list.
uh-huh. And I like it. I would even consider staying short all the way down here to
Oh
277 and slightly lower.
yeah, yeah. I mean, the whole Magnificent Seven right now just looks horrific. And, and the market's really been relying on their earnings to strip them out. And I mean, performance wise, the market sucks, but earnings growth wise, the market sucks. So
Right.
this is not not a good sign. So yeah, no, we'll ride the Mag 7 all the way down unless Cramer flips on him, which, he could do, but,
Sure.
that'll probably be the spot to go long once he does.
Exactly. We'll wait till he bottom takes it and go along. um,
Yeah. Yeah, no
Caution.
problem with that. We take both sides in SJIM.
Absolutely. And cautionary tales of price action. There's only two things I would kind of consider to be cautious if you're already short. The old half and whole rule comes into play here, and like we've made that halfway move through the previous measured move block. That's right at that key pivot at 277 ish there. Definitely ride the momentum on it. I can definitely see staying short on this thing. It looks pretty damn bearish to me, but around
I've
this.
watched that 275-ish, 276, 275-ish area. It tried to, I mean, it didn't quite get there today, but it made a move and it bounced. So, I mean, if
Right.
I were short and I were, swinging or day trading, that's what I would look at. If it kind of undercut and moves back above, I'd be a little more careful.
Absolutely. So I mean, looking like it can still remain bearish, but this is that cautionary level of okay. If we start to see a reversal here, I definitely consider covering that and moving on to the next beat. All right. Hell, we're getting ahead of ourselves here. Looking at what was the next thing he talked about? He spent a whole thing going on for like geopolitical risk and all this crap. There's just war is one thing, but like the old adage of what is it? Sell the threat, buy the invasion. This isn't.
Well, his other big thing that he's been on for a while now is interest rates.
Yeah,
Kind of like, all right, thank you, Captain Obvious.
yeah. No kidding.
He came out with something last night. Oh, what we need for the market to recover, interest rates to go down. Like, okay, thanks, man.
Yeah, I mean that's a no-brainer. You know
Genius.
that between that and cheap energy, those are the two key metrics of having a thriving market: is affordable energy and ability to borrow without having to pay through the nose. So yeah, those interest rates are going to be the key. But I also look at energy, and I don't need to get into the charts to tell people energy. If you've noticed at the gas pump, even the prices come down a bit. Cool. That's one thing starting to fall into place. Let's wait and see what happens with the rates. Sure, we could have that recovery. Sure, our cup and handle could play out with a little artificial manipulation by the governing bodies of the U.S. here, of course. But in the meantime, we just play what's in front of us, and we're looking like bearish until we run out of gas, and then we'll go for bulls. He did mention Nvidia, and then he threw some shade at Intel Corp, of course. And I haven't looked at Nvidia yet, have I? I don't remember if I did. Oh, that's right. We were looking at your ETF earlier. Nvidia been a great short. I like.
Remember, you can do 2x short now.
That's right.
Little plug for which one is my 2x short? NVDQ.
NVDQ, and I'll look at that next. Actually, you just opened that the other day. I think it was.
Yeah, I mean last week. I think it launched like Thursday, so not much of a chart.
Yeah, it'll be like a good 1 minute chart. But yeah, looking at Nvidia, I'm pretty bearish right down to like the 398 level. I think for the short term. Long term, this thing could certainly go and start retracing some of its steps here. We've got a key angular here in this rising channel. I've been drawing dope on this thing forever. We have a shot at breaking what we call the regression line, and this gap kind of follows that to where you get to a target on the daily 200 usually, and we are plenty under the 50-day. So if this level cracks, we could go lower much faster. And then there's that old half and whole rule right here, pretty plain to see on that block. I might say that if it crushes this level, cool, we could stay short. Just be a little leery right at that 395 to 398 level, and see what
I'd
goes
also
from there.
watch the 400 level. I think the market cares about round numbers like that.
It does.
And you saw like today, it hit 40105 and bounced off that.
Yes, it did with a nice little wick, and we'll see if it plays out. I mean, we're so far, we're still kind of that descending channel. This is where it would be likely to bounce. The old penny stock trade was you look for these descending channels and trade the retracement. So I mean, it could, for all intents and purposes, return right to about 409.80 today, pretty easy. Don't throw me under the bus if it hits exactly that number in the close. But from a day trader's perspective, it's a great stock to trade. But for swing trading, if you've got big positions, you got to move around, like trading an ETF or something. Yeah, this is where you kind of look for that. Let's cover a little bit, maybe take some risk off, and yes, we can reach for that low down here, but the whole numbers matter as well, and that's absolutely one thing to definitely pay attention to. But looking at what happens later if it cracks this zone, man, that hype bubble from AI was pretty damn big, and it can certainly come tumbling down and meet those levels. So if we start,
and it has on the S&P 500. I mean, we broke 4,200, which is what we broke on the upside when NVIDIA had their gap up.
Right. So I mean, plain and simple, that price action is going to tell you all the clues you need to know. And yes, if we crush this level, we'll certainly start looking for these. Absolutely. As far as like the measured move targets on that, I mean, we've pretty much made, there's a 1-for-1 here, and even though there's a gap here, you can see pretty clearly retraced to 50%, continued the move back down to the next low. This will be the pivotal area. It's either going to bounce here or it's not. Looking at like 1 minute charts for so long, you start to see these pretty often. It's resemblant of a rounding top where they look bearish as hell until they hit a key level and bounce. So this is where you're taking that cautionary level, and if it does bounce, it'll usually come and retrace somewhere in this area, and we've got lots of levels to look back on. So this will become a good day trading stock as well very soon. And if it does indeed bounce here, we can get a bullish retracement. The 430 area. We've got a target up here at like 460 something. It can certainly play around in those levels, but we've achieved everything we wanted to achieve being bullish on it. So we got to look for some bear moves on this thing. This is one of the times where we can watch for this to continue lower or just trade what's in front of us and go long on it. We don't have to care which way it goes as long as we make money. um, I'm gonna kind of move away from Nvidia because I think for now everybody's looking at this stock and we can just day trade it until we see something trend.
Yeah, it does provide nice levels for day trading.
And likewise, with that whole thing that Jim said about the Nvidia taking the chip market away from AMD and Intel Corp. Intel's at a key support level, and it's at a previous analyst target too at $32 ish. We could see this thing bounce as well. So clean level down. If it smokes it, cool. We got bear targets. If it holds here and bounces, well, we've got bull targets too. Trade what's in front of you. But this is the exact thing that we would expect Nvidia to do. We've made that nice measured move, 2-for-1 up, half and whole. Look where that analyst target is, right in the middle of the box, baby, and we're just about there. So let's pay attention to this thing in the next few days here, possibly next week. We might be able to see a good swing trade out of it either way, either side of this key pivot here. That is all I can say about Nvidia or Intel. Let's see here. What was the next thing? You mentioned gold, but have you ever been interested in really trading much on gold ETFs? I mean,
I love actually trading gold miners and silver miners.
agreed.
They are my favorite thing to trade. They're always on watch. I actually this morning just bought a gold miner and a silver miner because they were starting to percolate. I think there's so many things that go on in the precious metals market that make it extremely compelling. And when those guys move, they move.
Yeah,
So
they
I
do.
I do love trading them. I'll trade options on GLD and SLV from time to time, but I prefer trading the miners.
A fun one I used to trade back in the day quite a bit, and I think I might get back into it again. JNUG. That leveraged bad boy was just psycho for trading options on. And man, the percentage return on risk was great. And it's kind of accumulated for a while now. I might consider that later. But one of the ones that Jim mentions here is gold. And I
Yeah,
look at
I
this
mean
thing.
that's a biggie. I don't like the big ones. I like
No,
the smaller ones.
agreed. I'm the same way. I'm liking the volatility on the smaller ones. The bigger ones, that just does not look like an interesting chart to trade to me. It just is choppy as all hell. You can't really make clean callouts on it, so why would you bother? Um, Investment status, sure, you could sell some options on it. Sure, you can collect a dividend on it, but other than that, I mean, for me, it just has no appeal to traders, in my opinion. I know a lot of people who do trade Barrick Gold. It's just whatever. Another
Yeah,
one,
to me, if I'm going to trade the big guys, I'll trade GDX. I'll
GDX
do
is
options on
far
GDX.
better. And one I used to love trading options on until the liquidity dried up was, for instance, Yamana Gold, AUY. That was great back in 2018, 2019. Good swings, pretty easy price action. But now, again, kind of looks a lot like Barrick, just choppy and hard to trade. Um, yeah, you go and look at GDX by comparison, far more interesting stock chart to trade. That one I tend to keep an eye on levels on that thing, and it's pretty simple. There's a nice, clean, measured move down with an extension for 1.5 down. We got return, we got a retracement. This has action that I can trade. That's where I'd say my interest would be better spent. But yeah,
I just in the golds area, I just bought AU options on AU this morning, and I've been trading in and out of that one pretty much most of the month because it looked like gold miners bottomed.
good stuff. I like AU too. I forgot about that one. And then I have a guilty pleasure. I still hold a long position in something that I should have sold a long time ago, but I'll tell you why I haven't sold it. This is one that's off the radar of everyone. All right. Let me see if I can remember the ticker. Uh, there it is. This is a junior miner that is kind of more vested in the real estate market, which is weird. And then even more weird is they're literally developing ways to literally dig through mining tailings from artisan miners and not only clean up the waste in them, but also extract more material from them. And I'm talking about LODE, Comstock Mining. They've changed their names a couple of times, whatever. Um,
LODE.
it's a doozy, man. I have traded
When?
this thing
Oh, wow.
forever.
Okay.
Back when it was like trading the 50-cent range, I would legit sell 50-cent calls and puts on this thing all the live long day. And then when it started to trend up, I would continue selling dollar covered calls and 50-cent cash covered puts. I accumulated this entire thing and I completely flattened my options position and kept the long position before this run up to damn near $10 on a massive, massive short squeeze with a decent little news outbreak. Um, at that time, I was already cost basis from my options income was negative $26, and I sold off about 2/3 of that position in this spike, right around the $8.50 to $9 level, and still held into this declining trend, and still sold options in and out of that thing all the way through. I'm having trouble finding any liquidity to sell any options in this, but it's
Yeah, I mean, it's
yeah,
traded $20,000 worth today, and we're
yeah,
already, more than halfway through the day.
it's
I mean,
weak
52,000 shares on a 40-cent price.
weak options liquidity now. I can still like sell like monthlies and sometimes like 3-month options expirations on it and get a little liquidity there, but it's just garbage for options income now. But back then it was liquid enough to be very lucrative to build a very negative cost basis on it. Current cost basis on this thing for me is negative $36.80 currently. So even if this goes to zero, I've made that. So I could care less what happens to it. I'll still hold it until the company either gets bought, goes under. I don't care. I get to sell it at zero and still make a profit. But I'm kind of interested in what they do. I looked into the fundamentals on this thing, and I rarely ever look into fundamentals. But if you read about this company and what they actually do some interesting things. And you look into some of the environmental things they're doing, and it makes sense. They built a mobile rig to go over and go through tailings from all the artisan mining that's been happening in the Philippines forever, and they're actually removing mercury from those tailings safely, which is still a useful metal. And then they're recovering the leftover gold and silver that's in those tailings, which is kind of a neat thing what they're doing. And they've done it back when I was looking at them. I also put things together, and then I actually called the CEO and asked him about it to confirm this. But they were running a pilot kind of experiment thing. They linked up with this company that makes compost out of, or they make potting soil out of gold mining tailings. Weirdest thing ever. Actually, it was neat because it was a chemistry thing. They developed this. This other company had developed this process to extract all the different metals and stuff out of toxic mine tailings, and were able to sell it off as potting soil with high nutrients in it, and still recover precious metals to maintain their business. That was Itronics was the name of that company. I don't think they're listed anymore. But long story short, this company got the chemistry involved in that process and ran with it. Now they're running this over in the Philippines and cleaning up mining waste. And they're on the Comstock, which is one of the most toxic, pits of tailings ever made in the big river that goes through there. I forgot the name of it, but that river is like full of mercury. It's just nasty. Mark Twain even wrote about it. But you look at that kind of history and what they've done and what they're doing. I think it's a great idea of what they're doing. It's just another junior miner, though, that once they've fully developed this technology, they're going to be a prime target for some big company to buy them out and start running with it.
It's got a $40 million market cap. So let's pull our all the viewer money together, and let's just buy it.
Yeah, right. we can control the float on this thing quite literally.
Might as well. We could have some fun with this.
For a while, some people might even remember me. I used to be big in stock twits, and I used to talk about this thing all the time. And some of the people who are still out there on stock twits looking at this thing, I haven't posted in there in a while. I've gone in and out a couple times, but they know that at one point I personally was in control of almost 3% of the float on that thing. It's just nuts. So, you kind of look at that. It's not a very big cap. It won't take much. And if ever there was something that some apes should look at if they want to make a difference, man, you could totally take this company over with a good 40, 50 people with the right money, or a few thousand people with even less right money. It wouldn't take much. But definitely look at it. It is a point of interest. It's one of my little guilty pleasures. I've been holding this thing forever, and it's paid for itself more than 100 times over. So I could care less what happens to the equity price, but I still think it's an interesting company. It's just kind of a neat one. All right, I think there was one other thing I looked at on Jim's list that I can pick over, and I think that'll probably be about time for us. Have you looked at OTIS?
I have not.
I hadn't either until today.
So yeah, another looks like POS.
Kind of, yeah. But it's got an interesting dividend on it. It looks to be a monthly dividend to boot. Pretty high dividend. So a lot of people who seek that dividend investment kind of look at these. They're dividend hunting. But equity-wise, let me see what Jim said about this thing. Let me read this out here.
Yeah. I mean, I don't know that I'd short it here, but I mean, 76.27 is a nice low that I'd look for as a level to go long. Again, I mean, I don't think I would go long or short this, but if I were.
Kind of an interesting one. It's a company that makes elevators. And
yeah.
Jim was pounding, not necessarily pounding the table, but he sounds like he was pounding the table on this. He said they reported great quarterly numbers. What has driven the industrial was record margins of 16.9%, thanks to a 90 basis point improvement in service. Kind of interesting stuff. This is kind of a new one. I haven't heard him talk about this one before. But looking at, he mentions Chinese service business. Refurbishment and safety is what they're focused on. Well, that's where things kind of get interesting. That's why, when we see China melt down, hey, look at China. It's right there on the chart.
Yep.
I wouldn't call it an interesting short until I realized, hey, look at this gap right here, y'all. It might be an interesting short for a short time, and it will fill that pretty quickly if it does, down to like $71 and some change.
And I think it was an interesting short back in August.
Yes, it was already. But looking at the price action on this thing, it's made a nice clean 1-for-1 down. It has bounced here with a big old spinning doji. Somebody had interest in buying this company down here. Who knows who? But looking at what Jim said yesterday at about 9:15, well, can we say liquidity gap? I would be interested in looking at this thing to have a nice little reversal here, and if it doesn't, it could short and go down here to that 73 level, maybe even reach down to that 71, 72 level, which was previously the bottom of that gap. So the top of that gap is kind of right in where it's at. Might get interesting here for another quick short, but I would certainly start kind of keeping an eye on this one. I might keep this in my list of stocks that I'm going to watch because I kind of like the price action in it. It actually has some pretty decent setups. It looks like a good trader, and I haven't even looked to see if it's optionable yet. But if it is,
I would bet it is. Whether it's liquid or not is a different story.
Right. But I mean, typically these monthly dividend-paying stocks tend to get interesting. Is that monthly or not? Let me see. I looked at the dates. 5. It looks quarterly. Never mind. Nonetheless, these dividend stocks that pay a reasonable interest rate or a reasonable dividend tend to be liquid enough to have a little options income on it. And if I have any experience with all the MREITs that I traded through the 2020-2021 period, did the same thing. A lot of those were high dividend paying stocks. They were just liquid enough to make some options income on, and reasonably, they gave good returns on investment for me, for a place to park some money and take advantage of the swing back up to the norm, which eventually did get there at the end of the pandemic. So, long story short, this might be kind of a similar setup where China continues to go to hell in a handbasket, so to speak, economically, and we'll start to see some interest right around this level, I think. So this could be something to keep an eye on. And if Jim's talking about it, I think liquidity will fall into it.
Yeah, anything Jim's talking about, you want to keep an eye on.
Absolutely. And although it's probably not very liquid for options now, it may become interesting in the near future, and that's what we look for. So he mentioned it. It's one he hasn't talked about before. Hey, let's look at it. All right then. I think we got about a couple minutes if you want. All yours, man. I'm pretty much done for the day.
Yeah, no, I mean, the only thing I would add is how bad this market sucks. I thought 4,200 was going to hold. I mean, not long term, but I thought it would hold for now. I mean, we sliced right through that like butter.
Yes, we did.
I mean, I would just tell people be careful. And what I also tell people is learn how to trade. So, what take advantage of, the education you guys are providing, because if you think that bonds are going to protect you, the past 2 years have taught you a pretty tough lesson. And actually, I was looking at it the other day. The Barclays Aggregate Index is now negative over the past 5 years.
Ooh.
So, bonds are not the key to safety. Learning how to trade is. Because,
Absolutely.
guys like you and me, I don't care which way the market goes. In fact, I mean, I don't know about you. I prefer playing it on the short side. So, I mean, I tend to do better on down days than I do on up days. And
I do like being a bear.
as we've been speaking, my portfolio is doing better and better today.
That's the way to be. Yeah, for me, I love being a bear too. I always say the market kind of tends to take the stairs up and the window down. You can make money fast in a bear market, but you got to learn how to trade, and that's the key to it all. And through all of this stuff, us at the Bullish Bears, we were thriving through this bearish market, and this volatility was like, oh man, you couldn't have asked for more. It was just beautiful. Even now, this is nowhere near the volatility we were seeing here. These trading days were just epic, and we made it simple. We were able to stay afloat in a market where all of the I hate to say the apes were chasing all of this artificial inflation or artificial market pumping here. The 11 or 12-year bull market based on QE. We kept saying you cannot short the Fed, just keep trading, and essentially it worked out great for everybody. And until this moment, and when things started to melt down, we were miles ahead of it. We were catching every one of these bearish trends, and it was just easy. And trading the rebounds even easier. Going into that situation where a lot of trading communities were built in the lockdown. A lot of people had nothing better to do, sit at home and trade. We know how that went. A lot of trading communities popped up. The ones that were actually doing some good were greatly consolidated right at that moment where the market tipped over. A bunch of them, everybody went back to work. Market kind of fell apart, went bearish. People started losing money and saying, "To hell with this, I'm done with trading." That 90-10 rule kind of really took effect. But a lot of the good traders who were left over were right here and literally paying it forward, teaching new people how to trade and how to maintain profitability even in a bear market. And yeah, the other moderators and I, we were like constantly going back and forth with like Yogi Bear jokes and like, "Hey, boo boo, I got a picnic basket for you," and "Watch out for Ranger Pal, Yogi," that kind of fun stuff, and it was a great time. Well, we had a great time being bears in the bear market, and now we're just waiting to see what this comes out to be. And this is the cautionary handle of our cup and handle setup that we've been looking at for months now. And this is a point where things are going to get critical. So definitely be careful out there. This market sucks if you're not good at trading, but it's wonderful if you are. So stay with it. Trade the charts. And remember, guys, it's not about what you trade. It's about how you trade it. thanks for joining us. Be sure to catch us next week and hit the bell so you know when we're coming. I'm going to start doing, if we can, some sort of regular schedule so it can be more regular. But hitting that bell certainly helps. So, you know. Anyway, thanks again, guys. Don't forget to tell your friends.